advisor. Just going to review the ASX 200 and a couple of different stocks. This is the first in the series of reviews which will happen weekly and sporadically when things become quite interesting. On the screen here you can see the results for the last week. Yesterday the ASX top 200 or the XJO went up 95 points, closing at 4,791 points. Over the week was a quite tumult, a lot of movement around the place. Month-to-date results for the XJO so far down 2.74%, quarterly down just over 4%, and year-to-date we're up 3.07%. Now, just going to have a look at the chart for the XJO. This is the top 200 chart for the Australian share market, and we'll just talk a little bit about the chart and see where we are. My background is basically from a technical analysis perspective, so that will be my focus on these discussions. We can see here the XJO shows a period from July last year through to current, and we're currently in a long-term uptrend. We can see this bottom blue line down here. This is the very long-term trend that the XJO has been following, and as we move closer to the current market, we can see in the last month or so the XJO has had quite a severe pullback from the around about the 5,250 mark down to nearly 4,650 mark. So that's a significant pullback, and certainly gives us great opportunity to be buying in the dips. But if you're a shareholder as we speak, then over the last month you've probably been in a little bit of pain. A couple of things from a technical point of view. I've got a few Fibonacci measures on this chart just to determine possible lines of support and resistance. And we can see here that we're using a Fibonacci fan which measures the angle. It's running from the trough down in June of last year to the peak in October, which is giving us these three angles. And we've also got a retracement pattern which is being measured from the trough of November through to the highs of where are we, in March, which is giving us a retracement scale as well. Now the red line that's been breached last week was the current trend that the XJO was in, and last week it failed. The market fell through that trend line, but notably it actually came back down to one of the Fibonacci fans, which was also a 61.8% retracement from this scale through here. Of note, at the moment the market's sitting at 47.91, which is just about to retest the upside of that rising trend line, so which is the one that failed last week. It's also about to retest the downward trend line, which puts it into quite an interesting perspective. Now, if the market decides that it would like to go through that trend line, then ideally we would probably look towards seeing it around the 49.50 within a couple of weeks. If it fails from this point, it could continue much lower, and even perhaps down in towards this 43.50, and perhaps testing this very long-term trend line, which is quite interesting. Now I'll just have a look at the top 20 results over the last couple of weeks. This is the top 20 quote screen that I use, and you'll notice that the last 5 days has seen, it's probably a mixed bag. The one of major major pain, I suppose, is Newcrest. Newcrest is down. The 13 was it down 13 over 13% this week. Nearly 30, over 29% in the last month, and 47% in the last 3 months. It's certainly not a pretty picture, and when you look at the chart, it is certainly a bit of a train wreck, with a revaluation of some of their assets. If we look at the last 1 month return on the ASX top 20, we can see that that the best result is Origin, which is actually the only company inside the top 20 to be positive, with a 2.53% increase. Year to date, that's looking at a bit over 11.5 plus its franking and dividends. This is just capital growth on the share. So still quite a nice return for Origin. As we move up and have a look at some of the last month's results for some of the others, NAB's down over 11%, Wesfarmers down over 10, Macquarie down over 10, and then we just sort of start getting down towards the mid-range. When we look at a couple of these different charts, and if you have any questions about any of these companies, please feel free to shoot me an email or leave a note on the YouTube channel. This webinar will be displayed on my blog, which is stevesoars.com, and please feel free to ask any questions, and I'll happily try and answer them in the upcoming episodes. Now, just going back to some other interesting charts that we were looking at for this episode. The ASX decided that it wanted to raise some capital, and the market didn't actually like the results or the reasoning behind that. And you can see that the ASX on Friday dropped dramatically. It was in quite a lot of pain. It was over 6% down. Huge volumes here, which is about 25 million shares. But you can see that it actually is coming down, and this is a point of support here, where the market is from a previous peak. Now, one thing of interest, you'll notice on the charts here, I've got a couple of simple indicators. The dots on the bottom section of this screen is called a parabolic SAR. Typically, I just use those to give me a visual aspect of a trend change in the shorter term. I don't typically use it to trade. I have used it in the past for trailing stop facilities, but currently I'm just using it for visual aid. Now, the top area on the screen up here, I've got the MACD. And one of the things that is quite interesting on this chart, and often we'll get asked as private wealth advisors or stockbrokers, how can you predict these massive falls in the market? Well, actually, the market tends to tell you a lot about what's going on before anything happens. So you can see up here that we've got what's called divergence occurring. Now, divergence occurs when the direction of the direction of the peaks on the chart is at one angle, but the direction of the peaks on the indicator is at the opposite angle. So you can see here that as the share price is rising for the ASX, on the MACD, the momentum of the indicator is actually getting weaker and weaker. So these points where we look at the highs of the market through here and the highs of the market through here, what I'm doing is just measuring the distance from or the change in angles. Now, this in its own right doesn't give me any specific trading information, but what it does, it makes the hairs on the back of my neck stand on end to suggest that the market is going in the wrong direction, or the momentum of the market is getting weaker and weaker. Now, the price can still rise for a number of weeks or months or even years, but ideally what we want to do is pay more attention when we see these sorts of things occurring. Now, the simplest way to do it from a technical point of view is it would be to just draw a trend line underneath the market. As the trend line started to breach, which would have occurred at late June, then that would have been a signal to either exit the position or start to look at protecting, but to pay attention depending on what your trading plans were. But this is the ASX at the moment, and certainly not looking that flash. You could easily consider that the market is probably still weak. We may see on Monday certainly there may be some small strength in the market, with a little bit of remorse buying, which often happens after a big fall in the stock market or a big fall on the chart. So have a look at that. There might be some interesting opportunities there for short-term traders at that point. CSL, which is one of the companies that over the last 12 months in the healthcare sector has really kicked some goals. It's basically traded from the $30 range about September of last year, traded up to about $65, and currently trading at just under 58. Extraordinary performance for the share. Doubling its market cap in 12 months or less, and certainly very, very strong in a nice consistent trend. Nothing really out of the ordinary here. What we're looking at is nice standard slow growth. These are the long-term trend lines. This is coming from the two troughs starting at September of 2011 through the trough February 2012, which gives us our base angle essentially. As the market tended to speed away or grow or increase its pace from that point, the market came and formed some new troughs through here. So we adjusted the angle of the trend line, and again once more with this red dotted line through here. Now, as this market sped away from this point, this red dotted line has just recently been broken around the $60 line. So what we should be expecting with CSL is that the market will come back and retest this mid trend line, which may even occur around this Fibonacci retracement point, which is a 23.6% retracement from its highs from the point of origin back here in September of 2011. So this red line has been breached. Again, on the MACD above it, we can also see that there was a divergence signal which occurred a little bit earlier. So again, understanding how indicators work and using them to your benefit allows us a lot of scope in the market, and allows us a little bit more understanding than just pure fundamentals. Last chart for the week, we're just going to cover National Australia Bank. National Australia Bank and the bank banking sector in total has had a very good run from November of last year, with its highs in early May. And since the highs in early May, we hit a high point at about the $34 in the $34 range, and the market has actually weakened at that point. Fallen down. This is a dividend through here, so there was a nice big drop for their dividend, which is 90 cents plus franking, which we see the price just or we see the share price removes that value from the asset. On late Wednesday, Thursday, and Friday of last week, and I'll just zoom in here a little bit so we can actually see it a little bit better. It looks a little bit weird when we go too close, but this is the Thursday's bar down through here, and the market came through and hit a low point. We had a nice size bar. We had a range in there with a high of 28.22 and a low of 27.55, so a bit over 70 cents. But you'll notice that the open and close point were very, very close together. Now, if you trade using candlesticks, you'll probably recognize that as pretty much close to what's called a doji, which shows that the market has a fair bit of indecision there. Now, from that point on Thursday, we opened lower, but we traded strongly up through that point, closing lower than closing higher than Wednesday's end. You'll also notice at that point there was a break of a short-term downward trend line, and the market continued up on Friday, traded higher, went above some resistance at $29, and traded towards the high end of its range on Friday, to close at $29.38. Now, from a trading perspective, it would be easy to suggest that National Australia Bank would easily be looking to go back and retest the areas around this trend line, which should be up into the $31 ranges. Depending on its speed, this wouldn't be out of the question. From a trading perspective, short-term aggressive traders may have used this sort of entry to get into to National Australia Bank. From a fundamental point of view, the drop that we've seen with NAB started to increase the yield, the payments on that the company was putting out, putting it above 7% without franking at these levels down here. So from an investment point of view, this is a great place to be picking up NAB for the long term for just purely a yield play. From a trading point of view, taking the early point, we could have used this break of downward trend to enter into the stock. Or if you were a little bit more conservative, you might do a couple of things. You could actually wait for a MACD crossover, which should occur in the next day or so, if the market continues to rise. You could also use, perhaps the parabolic SAR change over there. So as when the dot changes from the top to the bottom, that would be considered a buy signal, depending on the settings that you use. So there's a number of things happening here with NAB. Generally, at the moment, it's certainly sitting in a nice position, and with a bit of luck, we should see some growth in NAB and the other banks, I would suggest, for this upcoming week. So thanks very much for your time today. I hope it's been of interest, and if you do have any questions regarding any of the things that we've discussed here today, please give me a call or leave a message on my blog or in the YouTube channel. Thanks very much, and we'll see you next time.